Quest Nutrition might possess much more revenue diversification compared to when it was acquired more than 5 years ago, but that doesn't mean the Quest bar has become any less of an important piece of the brand's multi-billion-dollar growth puzzle today. So I'll decode that introductory statement a bit later in this content, but on January 8th of 2025, the Simply Good Foods Company reported its fiscal 2025 first quarter earnings for the period ending November 30th of 2024. As I usually do on these quarterly updates, I'll start by running through some high-level financial data to update you on how the Simply Good Foods Company performed recently, but more importantly, I'll use the earnings report, notes I took while listening to the earnings conference call, and any relevant publicly disclosed news to give context for my expanded strategic commentary on trends that are happening within the nutritional snacking space. And for those newer to my quarterly content on the Simply Good Foods Company that might not be super familiar with the functional CPG brands that are within this portfolio, it's Quest Nutrition, Atkins, yes, originating from the Atkins diet, and Only What You Need, or better known as OWYN, that was acquired on June 13th. So that means that there will be some acquisition related financial impact within year over year comparatives from OWYN, which I'll do my best to highlight when meaningful. Okay, enough with that House of Brands housekeeping stuff. Let's get into some of those financial numbers first. In the first quarter of fiscal 2025, the Simply Good Foods Company portfolio reported generating revenue of $341.3 million, which was up 10.6% year over year. But don't get too hyped on that growth because it was actually flattish year over year when you take into consideration the revenue contribution from the OWN acquisition. Then, on a quarter over quarter sequential basis, revenue was down slightly more than 9%. And this comparative result is worse than recent history, but for context, sequential quarter over quarter revenue decline is normal between the company's fiscal year Q4 and Q1. That also means that the very important New Year, New You season falls into fiscal Q2 for the Simply Good Foods Company. Looking quickly at the margin side, the company had gross margins of 38.2%, which was up 90 basis points year over year, but was down 60 basis points quarter over quarter. It was noted that the improving year over year gross margins were the result of lower legacy business ingredient and packaging costs and the inclusion of OWN. But jumping back into revenue related insights, the total Simply Good Foods Company retail takeaway for the 13 weeks ending November 30th of 2024 increased about 8% year over year in the US combined measured and unmeasured channels. As a portfolio, the Simply Good Foods Company is below the measured channel nutritional snacking categorical average of about 12% growth. But as you'll hear in the next sections, that's due to the Atkins brand dragging down the positive performance of Quest Nutrition and OWN. So let's separate out these portfolio brands, and we can start with a review of how Atkins Nutritionals performed during this quarter. And even if you haven't been an avid follower of my content for the past several years, I guess you could kind of intuitively assume that it's been tough sledding recently for the weight management category. This has been made even more complicated with the approval of pharmaceutical weight loss solutions. But even though the weight management category is evolving, company supported consumer research shows that around 80% of consumers are looking to lose weight or maintain a healthy living lifestyle. And Atkins is distinctly and uniquely positioned as the most trusted low carb, low sugar solution. Moreover, when consumers try Atkins products, they are pleased and delighted. Yet, as you'll kind of notice from the brand results this quarter, there continues to be a slight disconnect between what people say about the Atkins brand and the company's ability to properly reach those people to create positive commercial results. But I'm not telling the Simply Good Foods Company team anything they don't fully acknowledge already, as the company is currently midstream and on track around the execution of its 5-point Atkins revitalization plan. Additionally, the brand's revised Atkins Way advertising that aligns with the evolving consumer views and conversation on weight wellness has received positive feedback and should provide a much needed tailwind for Atkins. In the first quarter of fiscal 2025, retail takeaway in the US measured and unmeasured channels combined for the Atkins brand was down 4% year over year. And while performance is still not great, These numbers were another consecutive percentage point improvement quarter over quarter. So that would presumably mean that early indicators of the Atkins revitalization plan are showing positive momentum. And just to highlight a few bright spots, retail takeaway increased within the two largest customers, which represents about 50% of the total Atkins measured retail dollar sales. Moreover, the brand's largest customer saw strong RTD shakes growth at 13%. Also, e commerce increased 12% year over year, driven by sales growth within all three major product forms. Throughout this fiscal year, the Atkins revitalization plan will move to its next phase that seeks to enhance profitability and long term sustainable growth. But it was warned that strategic actions could create additional short term revenue headwinds with expected distribution losses, volume declines due to reduction in low ROI marketing spend, and the discontinuation of its Canadian export business. But maybe this would be kind of a good time to transition my focus towards examining the recent performance of the convenient nutrition brand that continues to outshine its legacy brand portfolio counterpart. In the first quarter of fiscal 2025, retail takeaway for Quest Nutrition across the measured and unmeasured channels combined increased about 10% year over year, continuing to outperform the active nutrition segment of the nutritional snacking category. And this categorical outperformance is being driven by an increase in household penetration, significant base velocity growth, increasing buy rates, distribution gains, and new product introductions. Looking at specific Quest Nutrition product categories more closely, retail takeaway growth of bars this quarter was up only 1% year over year. But while Quest bar growth is in line with the total subsegment average within the important convenience channel, recent performance is lagging internal expectations, and Simply Good Foods Company leadership fast tracked a new bar format innovation that should launch next month called Quest Overload. And then on to the snack segment of Quest Nutrition, which now accounts for basically half of all the brand's total measured channel retail sales. It saw retail takeaway growth of about 19% year over year. But if we probe one layer deeper, the salty side of the Quest snack segment had quarterly retail takeaway growth of about 26%. In fact, Quest chips now represents about 25% of the total Quest Nutrition revenue and provides a substantial share of new customers into the brand. And I've sounded like a broken record lately when it comes to stating that salty snacks are where the excitement and primary focus should be placed within Quest Nutrition. But it's important for me to also reiterate that any of this innovation risk only makes sense if the bar business continues to be healthy. So while it was a higher proportion in 2019, the bar segment still accounts for about half of the total Quest Nutrition revenue. And that's why Quest Nutrition hasn't shied away from innovation or renovation activities over the recent years, from enrobed variants, mini sizes, revamping its formulations, and now launching the Overload bar platform. These new Quest bars are said to be loaded with inclusions, have a unique texture and mouthfeel, plus bring variety and excitement to the bar segment that traditionally responds positively to newness. Moreover, leadership stated on the earnings call that the bar format innovation pipeline is robust several years out that will certainly breathe new life into Quest Nutrition, if not the entire category. Only time will tell if the Simply Good Foods Company can ultimately meet those huge internal expectations. But in the meantime, I'd expect practical actions from the brand, like placing more advertising focus on the Quest bars. And then finally, let's analyze what's going on with the newest Simply Good Foods Company portfolio brand, OWYN. I'm not sure how long everyone will allow me to take this victory lap, but as I documented in content previously, I predicted Simply Good Foods Company would acquire the plant-based protein shake brand way back in early 2021. Why? Simply put, no pun intended, OWN aligns with the Simply Good Foods Company portfolio platform strategy, and it reaches a new incremental consumer segment that's highly appealing. Additionally, OWN continues to be one of the fastest growing RTD protein shakes in dollar sales and one of the largest sports nutrition multi-pack brands in the market. And in the first quarter of fiscal 2025, retail takeaway growth for OWN across the measured and unmeasured combined channels was about 67% year over year, coming from both distribution gains and velocity growth. And it's not one customer or sales channel either, as OWN has significantly accelerated across all major retail customers. And the OWYN integration work is progressing as planned, and Simply Good Foods will capture about 80% of the cost synergies by the end of this fiscal year. Based on revenue growth models, Simply Good Foods leadership expects OWYN fiscal 2025 net sales to be within the $135 million to $145 million range. And while the first quarter net sales of OWYN reached just over $32 million, I still believe those internal full year projections are conservative, especially if they don't intentionally restrict ACV growth or store level trade promotion activities that lessen velocities and incremental store placements. But something tells me this is just kind of a financial modeling thing, as that same 20 to 30% year over year growth rate over the next 3 years puts them at their longer term expectation of doubling the revenue of OWN. So I'm not personally reading too much into anything, as I only see positive tailwinds ahead in terms of brand strength and awareness improvements, especially with OWN getting a boost from the Simply Good Foods go to market scale, capabilities, and category advisor relationships within almost all top retailers. Finally, while I'm not sure any new or groundbreaking products will come out this year, it would be silly to think under the ownership of Simply Good Foods that OWN wouldn't expand into new formats in the near term future. But overall, whether it's bars, liquids, or other snacking formats, these convenient nutrition subcategories collectively continue to be a volume standout versus most of the standard grocery store spaces. And then when you consider some of those long term secular wellness and convenience trends, along with the expected GLP-1 tailwinds continuing, and it's certainly an exciting CPG space to be building within over the next 5 to 10 years. But I hope you enjoyed the first principles thinking that went into my latest YouTube video. If you did, can you do me a favor by hitting that like button? That quick and free action helps YouTube know my content is worth spreading to more people. Also, we're getting really close to reaching my next subscriber goal, and it would be great if you join me on this journey. But to do that, we need to fix the fact that slightly more than three-fourths of you that are watching this video right now are not subscribed to my YouTube channel, and that hurts my feelings. Regardless, I want to thank you for giving me some of your attention and time, and I'll see you on the next one.